Thank you so much for joining us. It's good to see you again, even if it is virtually.
Well, thanks a lot for having me. I appreciate the opportunity.
Of course, that's our pleasure. We like to start off all these webinars in traditional sense with the same thing, which is our famous disclaimer. Just to give you an idea, Madison Trust is a passive custodian. We do not render any type of tax, legal, or financial advice. So, with that getting out of the way, let's hop into question number one that we have. So, we always like to highlight the beginning stages of how certain organizations we feature on these webinars kind of come up. If you don't mind, could you kind of walk us through like the journey you've had specifically with Wall Street, like you've had, and then some of the pivotal moments that kind of shaped your career and leading us to where we are now?
Sure. So I'll start with my disclaimer as well. So nothing that I'm saying here, it's education, it's entertainment. It is not investment advice. I do this for a living, but I also want to be clear, like, I'm not offering any investment advice in this conversation. So, or tax advice, because we're talking IRAs and retirement capital. Um, with that out of the way, yeah, my journey on Wall Street, was not by design. It just Wall Street happened to me. I came out of engineering school, and started my career in earnest as a software engineer. This was back in India. I grew up in a small town. And software engineering itself was cool enough because, it didn't exist when I was in high school. It was like very new. This is back in the 90s. Um, so I started as a software engineer, and then the company that I used to work for, they got a brand new client, Morgan Stanley in New York City, and they offered me this opportunity to go to New York and work for Morgan Stanley. So that brought me to Midtown Manhattan, and that's how my journey on Wall Street really started. And I enjoyed that a lot, just the experience of like the vibe of New York City, being at a prestigious firm like Morgan Stanley. Um, and over time, the next few years, the business that I used to work for, they would support hedge funds. So it was the prime brokerage business at Morgan Stanley. And so we would learn about all these cool investment strategies that these hedge funds are deploying and all. And I got fascinated by that, fascinated to the extent that like I wanted to become an investment manager. Of course, transitioning from, a software engineer to an investment manager is a big deal, even if I was at Morgan Stanley, like I had no investment background whatsoever. Um, and I wanted to do it right because it was going to be a major switch. Software engineering is a great career by itself, very satisfying and lucrative. But I decided like this is kind of where my passions lay. So I wanted to do it right. So I studied for the CFA charter. CFA charter essentially is like three exams you pass over the course of 3 years. So it's a self-study curriculum, but it takes up, it's brutal, incredibly hard. The pass rate, I think by the time you get through all three layers, the three levels of exams, comes down to like 10% or the low teens. So it's like
Wow.
40% pass rate at the first level, and another 40% of those at the second level, and the 40% of those at the third level. So anyways, I enjoyed it, but it was brutal, going through all that. But that's how I got my financial education while on the job. And then went to work for BlackRock. And now I'll cut the long story short, but it took a while before like BlackRock accepted me as a portfolio manager, and I started small. And then eventually by the time I left BlackRock, I was managing multi-billion dollar portfolios for them. So that was sort of my journey in the corporate Wall Street world. Yeah.
There we go. I love it just because it's funny how like these smaller decisions kind of pop up throughout your life that just kind of lead you in different courses and things like that. For example, like with me, I ended up entering the tech field as well, working on like systems and things for a telecommunications company. From
Uh-huh.
there to only jump into the financial side, working on those systems, understanding how finance worked, and then 10 years later, here I am at Madison Trust. Just completely, absolutely bananas how these little twists and turns happen throughout life. On that note, when it comes to our next question, some of it in terms of interaction, the other part of it is strategy. How would you define your investment philosophy, given the experience that you have, and the core principles that drive the decision making that you have now, and that you've had in the past?
Yeah. There's obviously a long journey here, but I'll kind of like focus on what my investment philosophy is now, or like, what are sort of the key factors that shaped it.
Yeah.
And I've managed multiple asset classes, in my corporate career. So stocks, bonds, currencies, have dealt with all kinds of assets. Of those, the ones that appealed to me most were disruptive technologies. And not just sort of the technological aspect of things, which appealed to the engineer in me, but also the human behavioral aspect of how a new technology is adopted, right? So in theory, you see this S curve, right, where you go from like early adopters to, and then it smoothly rises where like a technology matures. In reality, that's not how it happens. There's a lot of friction along the way. There's back and forths, there's failures, there's bankruptcies, there's crises, all kinds of stuff that happens along the way, both in terms of how a technology matures, how it disrupts an existing industry, and then how do markets, actually accept it or adapt it over time. So I found it fascinating both from, the technological and the human or the psychological aspect of it. So that became a focus over time, similar to my Wall Street journey. It was not something that like it was not an epiphany overnight. It's just like this is kind of what I slowly gravitated towards. So that's kind of been a big pillar, and now a significant pillar of what I do, or the foundation of what I do. And the other aspect that I really enjoy investing in, or looking for, is these hugely asymmetric bets, right? Those are the kind of bets that like I really like, or investment opportunities that I really like, where, okay, you invest $100, and you could lose up to $100, so that's the downside of it. But if it works out for you, you could make 1,000 or 10,000, and those are the kind of opportunities that excite me the most, and those are the ones that I tend to gravitate towards.
Very cool. Love that answer, honestly. I mean, some people would say investing could be potentially viewed as gambling. If you have enough information, is it really a gamble when it comes to certain things? So obviously nothing is a sure thing when it comes to investing, but
I mean, there's a difference between gambling and taking a risk, right? Like you
right.
you have to accept risk if you want to be an investor. Small, large,
Yes.
everybody has a different risk appetite. But yeah, I mean, you size your positions. If you're going to bet on something that could go to zero, then you don't take your entire wealth and put into something like that. But you can put a small fraction of your wealth. So if you lose it, it's not the end of the world. Of course, like every loss hurts. Nobody wants it. But so that's the difference between, yes, you educate yourself, you learn about the investment, but then you also size your bets or your investments, reasonably, where like you don't
Yeah.
lose your sleep too much, right?
No, exactly. Yeah. That's why, in my personal experience, I've always tried to spread things out into various baskets, as you said, instead of keeping them all in one.
Yeah,
Because one hole in that ship and it goes down. But I'm
right.
glad that we're very, very much on the same page when it comes to this.
Yeah.
We'll kind of move over to our next question. After your time in traditional finance, what was the aha moment, as we call it, that led to your focus exclusively on like the Bitcoin ecosystem?
Yeah, the Bitcoin ecosystem. So, First time I learned about it was, I believe, the memory kind of like fades me a little bit, but I think it was like a Bloomberg article about 12 years ago when Bitcoin first crossed $1,000. And I had never heard of it until then. It had been around for a few years, but
Right.
we're still talking 2014, right? These are still early days of Bitcoin compared to where we're today. So, I was curious, just like I was curious about every other asset class, on the planet. It's like, what is this thing? And so I read the Bitcoin white paper and started learning about it. And I was like very so then I kind of like learned about it. And what fascinated me about it was just the whole design, of this technology. Sort of the core principle. So one, it was bringing back the store of value or sound money principles
Yeah.
back into the economy, which there has been a lot of writing about central banks, keep flooding the markets with money every time, there's any sort of crisis, which leads to inflation. And we've
Right.
seen, what we've seen some, a decent amount of inflation in the US, but it can be like far scarier in some of the smaller markets
Right.
that are
Right.
not as mature as the US is. So, just it's just a monetary system where like Bitcoin, there's 21 million units of Bitcoin. That is the complete supply of it. That will ever exist, of which 20 million are already in circulation. So there's 1 million left to go, which will take another 100 years to come out.
Mhm.
And so it's a very well-defined supply, and in that sense, like similar or to gold, using the scarcity principle, and a control on supply. Um, so it used to be called digital gold as well, like when Bitcoin started, because there were people would look for analogies to try to describe what this thing is because it was so new and so different. But that's where it got its like digital gold label from, just the scarcity and of supply. So that's one side of it that that I found really appealing. And the other side of it, which appealed to me as an engineer, was the entire design of trustlessness or decentralization. So we've all grown up in a world where we are used to interacting through an intermediary or a central authority, right? There is a company that we
Right.
work with, like our bank is a corporation, you know. All the entities that we work with, like they're either corporations, government entities, central banks, that is what we're used to. So there is always a central authority that would the world we're used to. Bitcoin, there is no central authority. It's a completely decentralized architecture. Anybody can become, a Bitcoin miner or a Bitcoin node. I won't go into too much technicalities of what those things mean. But you can basically, contribute as much as you like or become a part of the Bitcoin ecosystem at whatever level you like. You do not need anybody's permission. Um, to become a part of the Bitcoin blockchain. There's millions of computers across the world that have copies of the Bitcoin blockchain, which is a global ledger, and no central authority, and you don't have to trust anybody. So if I want to send some Bitcoin to Christian, I can totally do it. I do not need anybody's permission. I don't have to go through my bank. I don't have to pay a wire fee or whatnot. There is a fee that the Bitcoin blockchain will charge you for the transaction.
Right.
And that kind of supports the economics of the blockchain itself. But compared to, like, I could, just making up a number, but I could send $1 million, right, and
Mhm.
pay like $5 in transaction fees, right, which is unheard of in the world that we've grown up in, right? So just like no censorship, trustlessness, no central authorities, sound money principles, those were things that like really fascinated me, and that's how my journey in the Bitcoin space started about 12 years ago.
That's incredible, honestly. going back to it, if you do want to send me Bitcoin, I'm totally available to receive it. So I remember when crypto obviously was like becoming like a big thing. I had a gaming computer and then I bought a second one, but I was going to get rid of the original one. And then my friend told me about Ethereum and that you could mine it using your
Yeah.
computer. And I was like, well, I'm not going to be using this one, and this one's a super powered computer. Let me try. After I think 2 months, my father told me to shut it down because the power bill had gotten out of
Power
control.
consumption. Yes, yes.
So
It is
yeah,
very, very, so Bitcoin mining is very easy to do, right? Bitcoin
yeah.
or Ethereum mining or all that, like you could learn it, what needs to be done over a weekend and actually start doing it. But that doesn't mean you're going to be profitable. Like that's a different
Exactly.
issue altogether.
Exactly. The money you lose in the power bill was not worth it at that point in time. And given the way power rates are right now, probably still not fully worth it. So,
Oh, no, yeah.
oh goodness, good times. I remember those. So, all right. Kind of keeping with the whole cryptocurrency aspect that we're focusing on. Um, where are you seeing, in your experience, the most significant pockets of innovation and expansion when it comes to the Bitcoin space today, as well as other cryptocurrencies that are currently out?
Yeah. I mean, I would say so. Bitcoin kind of goes in these 4-year cycles,
Hmm.
which also align with, and these are market cycles. So you get Bitcoin is so like it gets some pretty large drawdowns along the way, roughly every 4 years. But these have also aligned with cycles of adoption. I would say this cycle in what we've seen is a cycle of like significant institutional and sovereign adoption. So we're seeing large institutions like BlackRock, the company I used to work for. Um, 12 years ago, their thoughts about Bitcoin were negative to neutral. It was so new
Right.
and it was too small for BlackRock to be honest as well, like for them to be like really interested in it. Um, Economically in it. But over time, these firms have learned, matured, and they have watched. So we got launch of these Bitcoin ETFs, which have been huge. I mean, these are all like multi-billion-dollar ETFs now. BlackRock has one, Fidelity has one.
Hmm.
I'm sure there will be more down the road. Similarly, asset management firms, that were reluctant to have Bitcoin ETFs available to their institutions have now accepted them. So, if you're on like a Morgan Stanley or a Goldman Sachs wealth management, you have access to these Bitcoin ETFs. Vanguard, which was like, it's probably the most conservative. Uh,
Right.
Asset manager out there, they have, accepted Bitcoin as well. So that's sort of the institutional side of it, that I've seen like significant adoption. Take a big name on Wall Street or an asset manager, and they have adopted Bitcoin. So that has been a huge area of expansion. And similarly with governments and regulators, right? So the U.S. government
Hmm.
has a Bitcoin reserve. There's several states in the U.S. that have already signed bills to have their own Bitcoin reserves. We've
Yep.
seen nations outside the U.S. Also having Bitcoin reserves or have made Bitcoin legal now. It used to be illegal in the past. So just that wave of adoption, from institutions at all levels that you can imagine, has been huge, and that has been the wave the last couple of years. So that's something that I've seen that, so it's here to stay. I mean, I believed it was here to stay a few years back. And I got lucky, in that sense, because my investments have worked out quite well. But now, there's just like this bigger push. So,
Yeah.
so in my mind, there's just like a much longer way to go because we're still talking, when people think about allocating to Bitcoin, we're still like people talk 1%, maybe up to 5%. I mean, those are the kind of allocations that people think about because it's still so
Hmm.
volatile. So it's nowhere near, mature. It won't be for another 10, 20 years. It's just going to go through these waves
Right.
of adaptation and friction along the way. Um, so I would say, yeah, that's been very, very encouraging, and that's bringing all sorts of regulatory acceptance, more software developers focused on it. So we'll see a whole bunch of innovation happening in the Bitcoin space.
100%.
Yeah.
I just find it so interesting just by, within our lifetime watching something that didn't exist at all of a sudden being such a major player and like a driver in the financial markets in the world altogether. I mean, I remember hearing stories of people who were like buying pizza with like a Bitcoin or two
Yeah,
to be able to like, and
very
then
expensive.
I had a friend who had like 5 or 6 Bitcoin at one point, and he's like, "Oh, this isn't going anywhere," and he got rid of them. And
Mm.
I hear about it constantly that it's one of his
Yes,
biggest regrets.
all kinds of Bitcoin stories. There's so many of them. Yeah.
Yeah, my favorite one would probably be someone that had a USB drive with all their passwords and Bitcoin keys on there, and they ended up throwing it out somehow, and it's somewhere in a landfill out in the UK or something like that. So, but who knows? Who knows how true those are? But moving on to our next point, staying with the topic. Excuse me. So Bitcoin, like you mentioned, does have its volatility as we've seen within the past year. We've seen it drop a certain percentage, go back up. With it being famously volatile, how do you advise investors, or maybe not advise, but you know, um, what would be your opinion, if hypothetically you were to advise investors to navigate its cynical nature without losing sight of the long-term kind of goal or thesis on it?
Yeah, obviously not providing any investment advice,
Yeah,
right?
just to be clear, yeah, hypothetically.
But just if you're going to invest in Bitcoin, right, or other
Mhm.
cryptocurrencies as well, but Bitcoin sort of premier. There's Bitcoin and then there's everything else. So Bitcoin stands out. Um, it's 60% of the crypto market. So it's big enough. And where it dominates the market, that's always been the case. But I guess think about your risk appetite. Not every people have different levels of risk aversion. I tend to have, a little more risk appetite than others do, and that's why I do what I do. Um, but if you're going to invest in it, be prepared, at least mentally, for 20 to 30% drawdowns happen in Bitcoin pretty much every year. So those are corrections in the Bitcoin space.
Mhm.
In like stock market, you go 20%, that's a bear market. In Bitcoin, 20-30% is just a correction. So it's not a bear
Yeah.
market yet. And then, historically it has had 70-80% drawdowns. In spite of those drawdown, it continues to grow. If you look at the long-term chart or the long-term growth rate of it, it's still immense. But that
Yeah.
volatility, again, going back to that S curve, right? And so from a distance, the S curve might look smooth. Close up, it's not very smooth, and so you have to be prepared. For a lot of volatility, which basically comes down to size your positions accordingly. Then if your volatility bothers you a lot, then or if it bothers you too much, stay away from it. But if you want to start somewhere, then maybe like a 1%, something like that, where,
Yeah.
you familiarize yourself, you live through a few months of it before you say, okay, I can handle this and I want to do more. But, step in slowly. And it's one thing to look at a chart that you haven't experienced yourself in your portfolio and say, "Oh yeah, I know." And it's another thing to experience it yourself, right? So, so it's
Exactly.
it's it's important. And then like hedging your risks, I think that gets a little more institutional. Like I don't think individuals, think about like hedging risks or hedging volatility or stuff like it. Those are the kind of things that we do, in our fund, to mitigate some of the drawdowns. But those would be more sophisticated tools. But I'm assuming, we're talking about like individual investors here, your clients. So hedging is not necessarily, part of their toolkit. Right?
Agreed. Understood.
Yeah.
The one thing I kind of to highlight something that you said regarding like the close-in view of certain S curves, they can be a little bit scary when you look out. When I was in college, I had a professor for several of my finance classes that his big thing would be zoom out. To relate to my generation. He would say zoom out. And what he meant by that was, and it's exactly what you said, when you look at the smaller date ranges or the smaller versions of these curves and these highs and lows, zoom out. Look at the larger time span and you see the steady growth. A lot of people Not a lot of people. Some people want that quick money, that quick, get rich
Yeah.
quick scheme. Those don't necessarily exist. People who are the most successful in this world tend to have a better view of the larger picture. So with anyone that's looking at investments, if you're looking to try to get rich in 6 weeks, more than likely will not happen. Obviously, in some cases it will, going back to the big GameStop surge that happened during COVID, where people were, they were trying to, what's it called? What was the word? I'm forgetting it. It was, hedge. No, they were trying to short GameStop, is what it
GameStop.
was. Yeah,
Yeah,
and then everyone found out about it and just kept buying and buying and sending it through the moon. But
yeah. I mean, one
focus on the
one thing
big
I'll add,
picture.
since since you just brought it up, and that's an important aspect as well, right? Like, if you want to invest in Bitcoin, or something like a disruptive technology like Bitcoin, this doesn't have to
Mhm.
be Bitcoin, only, but this applies to any sort of, disruptive tech. Is if you're not prepared to hold it for like 4 to 5 years at least,
Mhm.
don't bother, because it's going to be rough, and you'll bail in 6 months, and you will bail at the worst time where, like, you've already lost 50% of your capital. So that's one of the things, is like, you have to have a long-term horizon, when you're making investments like these, because the short term can be very volatile. Yeah.
Agreed. Agreed. Yeah, I'm trying to make money quickly. That's not the best
Yeah.
idea for those out there.
Yeah.
Um, Something I kind of wanted to switch into, kind of going away from the Bitcoin topic. So when we started our initial conversation between Madison Trust and Harmony, the thing that drew me to your company was just the name. Because whenever I decide to reach out to different companies, or vice versa, I always look at the name. I always want to find something interesting, something that kind of stands out. And when I saw the name Harmony, I was like, well, I want to know more. And plus, the name of the fund is also interesting. So, if you don't mind, could you kind of give us the story behind how you landed on Harmony, and then how does that reflect kind of like your firm's mission?
Yeah, sure. The name came about as Harmony is spelled with money, Money, in it, right? So it's eight
Yeah.
letters as opposed to seven, the English word harmony. And so the way it came about was, where I am, at this sort of phase of my life, and what I want to do with, with the next 10, 20 years ahead of me, is like, I want to have a good balance of, financial growth, and peace of mind. Right? There are certain kinds of risks that I'm willing to take, others that I'm not. I also want, the investments that I make from here on to align with some core principles, or like, invest in things. I want to invest in things that resonate with me. I don't want to invest in things that, um, you know, just to make money, right? And so those were, some of the thoughts that, that went into that name. So it is Harmony. So financial growth is as important as a good night's sleep, for me, and that's what sort of that word kind of like brings together. Yeah.
I love that. I love that, honestly. And then the fund that you've currently got going on, the name behind that, love that as well.
Oh yeah, yeah. So the fund itself is called Snowball, right? And that comes from, by my belief about, so Snowball is a Bitcoin ecosystem fund,
Hmm.
and it comes from my sort of, interest, or belief in the principle of compounding, right? I mean,
Hmm.
it's the most miraculous thing there is in the financial world, right? And so I've sort of designed my strategy to maximize, the compounding, effects, that can come from a technology like Bitcoin, right? And of
Yeah.
course, it had to be Bitcoin, because I believe Bitcoin has that, the pillars, the right technology, the right architecture, where it can, it has the material, to compound over a long time, which, we've seen plenty of evidence that, it does do that. And what the strategy tries to do is, is essentially sort of dampen, some of the volatility, mitigate some of the drawdowns along the way, to create a more smoother investor experience, but
Right.
also improve some of the aspects of compounding because, as you know, large drawdowns are detrimental to compounding, right? If you
Mhm.
lose 10%, now you have to make 11%. So if you went from $100 to $90, now you have to make $10 to get back to 100, which is 11% of 90. If you lose
Exactly.
20%, now you have to make 25% to get back to even. You lose 50%, you have to make 100% to get back to even. And then it only gets worse from there, right?
Yeah.
And so as much as like, large drawdowns are a fact, um, of technologies or like investing in disruptive technologies, there are ways that they can be mitigated, and that's part of sort of like the value that I try to provide, from my experiences and what I've learned over the years. But that's that's
Understood.
how that's how Snowball came about.
Again, the names are, I know it sounds silly, but I mean, ever since I was a kid, when I would go to like for example, side note, whenever I would go to like the horse racing track with my grandfather, I would always pick horses with like like weird and interesting names, and I've adopted that philosophy, which I'm glad I did because I meet amazing people like yourself and find out about great organizations like Harmony Capital. So I'm going to leave it at that.
Cool.
Um,
Thank you. I'm glad you
Absolutely.
like the names. Yeah.
No, yeah, that's why we're talking. So honestly, I loved it. But we'll kind of, since we're hitting the kind of 30-minute mark here, I'm just going to check in with Alberto just to see if there's any questions for the Q&A session for the webinar.
Yeah, thanks, Christian. We have a number of them coming in, and as I mentioned in the beginning of the webinar, if any come to your mind throughout this Q&A session, please feel free to type them in the Q&A chat below button. But first one coming in is asking, what are some common misconceptions investors have about digital assets?
Um, Misconceptions. Um, I think an important thing to realize is that self-custody, or like decentralization that we talked about, that is an aspect that's very unique to digital assets. So self-custody basically means you have the keys to your wallet, right? And which the beautiful side of that is you don't need anybody's permission to spend whatever is in your wallet, right? Like there's no way anybody can lock you out. Like if you have a bank account, for example, and the bank decides to lock you out for whatever reasons they have, they can, and you'll have to deal with it. In self-custody, there is no such thing. You have complete control of the assets that are in your wallet. Um, the downside to be aware of as well is that you are the only one who has the keys to your wallet, right? So if you end up sending money to the wrong party, or if you end up losing the keys, you are on your own. There is also nobody you can call to fix the problem for you. And there have been some crazy cases like that where people have lost keys to wallets that has significant amount of digital assets in them. So you have to protect those keys. Have multiple copies of them, store them in different locations. That's part of the responsibility that comes with the freedom of like having your money in your pocket, and not having to worry about anybody's permissions. Yeah.
So yeah, it's a great point. Honestly, just again going back to that landfill story, someone threw the keys to that wallet out, and there's billions of dollars out there just floating in a landfill somewhere.
In
But
a landfill,
I mean,
yes.
I think just to kind of go on the same thread that you were on when it comes to misconceptions with some of the investors I've dealt with, not so much here at Madison, but just in general outside of here, the big misconception with any type of like digital asset, for example, like cryptocurrency, some investors just have a hard time wrapping their head around like, well, it's not like a company where they have different releases of different products or different things coming out. Like, how am I supposed to know what's going to happen with these types of digital assets? And the reality is we don't know, but with certain juggernauts like there are like Bitcoin, I mean, I don't want to say it's guaranteed, but I mean, it grows pretty steadily year after year, even with those drawbacks happening. But I think that would
That's
be
true. Yeah, I mean,
important.
if you want to learn, there's obviously a bunch of information, about Bitcoin or other cryptocurrencies, available on the internet that you can learn from. But if you get actively involved, you sort of have to follow their development path, right? And so
Right.
there's these decentralized teams of developers that are working on, at the end of the day, it's protocol, it's a protocol, it's open source software, like Bitcoin is open source software, right? So you can see what modifications are being made to the code, when are they going to be released, so on and so forth. And that's the level. So just like, if you're tracking a company, you would follow their earnings calls, those kind of things.
Yeah.
In Bitcoin, you can follow sort of the development plan. You can follow the other cool thing that you can do on blockchains is, because blockchains are public and open, you can actually trace every transaction on blockchain, right? So, for example, if I wanted to know who owns every share of BlackRock, and as an example, like I don't have a way of knowing that, but I can trace every Bitcoin to a wallet, because like all the wallets in Bitcoin have to exist on the Bitcoin blockchain.
Hmm.
They might be owned by different people. Like I might not know the entity that actually owns it, but I can see the number of wallets. I can see the transactions that are happening as Bitcoin is moving from one wallet to another. And there's a lot of very cool analytics that can come, and there's firms that do an excellent job that have been at this for like several years now. Very interesting analytics that tell you about like what's Bitcoin doing, like are people accumulating it, are people distributing it, what should you expect, in terms of like price action. I guess like forecasting is always more art than science, but there is a lot of information. The point I want to make is that there is a lot of information that Bitcoin and these public blockchains make available, which is very unique to this architecture, which did not exist in the traditional financial world that we're all used to.
That's really interesting. I did not know you can see where all like Bitcoin transactions kind of go. That is news to me. Good thing I don't own any Bitcoin, just because who knows? I might have ordered pizza all those years ago. So who knows? Who knows? That's actually really cool. I learn
Yeah.
something new every time I talk about cryptocurrencies.
Thank you very much for having me. I really appreciate the opportunity. I greatly enjoyed this conversation, Christian and Alberto. So appreciate that, and stay safe, and manage your volatility. Think long term. Those
Zoom
would be
out.
some zoom out. Yeah,
Yeah.
zoom out from time to time. Don't let. I mean, I like. I think a lot more about Bitcoin than other parts of the market, but there's a lot of volatility in the market elsewhere too. These days. So just stay safe out there. Yeah.
100%. Well, Vishal, I want to say personally, on my behalf and then on the behalf of Madison, that we are really happy that you were able to join us today. It's always a pleasure speaking with you and working with you on anything that we have coming our way. And I want to thank everyone who was able to tune in today. And then for those of you watching after the fact, maybe join us live on the next one. That would be great to have you guys there. But I want to thank everyone for joining us, and Alberto for being our co-host as well. And yeah, feel free to reach out to us at any time. We're always happy to help.